Hello, everyone, and welcome. Thank you so much for joining us today for our webinar on strategies for funding an ABLE account. This is our February webinar for the ABLEnational Resource Center, and my name is Miranda Kennedy, and I'm the director of the ABLEnational Resource Center. So for those of you who are not familiar with the ABLEnational Resource Center, this may be your first call joining us, and others, you've joined us on many more before now, and we welcome you back. But for those of you who are new, the ABLEnational Resource Center is a collaborative whose supporters share the goal of accelerating the design and availability of ABLE accounts for the benefit of individuals with disabilities and their families. We bring together the investment, support, and resources of the country's largest and most influential national disability organizations. And you can check out our Resource Center's website at www.ablenrc.org. We're really excited about sharing the information today. We have a number of strategies to share with you and hope that you will come away with some additional ideas around how to fund your ABLE account. But before we get into all of that, I'm going to hand it over to my colleague, Maggie Redden, who's going to walk us through just a couple quick logistical slides on accessing the webinar and participating in today's presentation. So Maggie, go ahead and take it away.
Yep. Hi, everybody. Welcome. Listening to the webinar today. The audio for today's webinar is being broadcast through your computer. Please make sure your speakers are turned on or your headphones are plugged in. You can control the audio broadcast via the audio broadcast panel. If you accidentally close the panel, you can reopen it by going to the Communicate menu at the top of the screen and choosing Join Audio Broadcast. If you do not have sound capabilities on your computer or prefer to listen by phone, please dial 1-650-479-3207. You will need the meeting code 663-577-296. And please note that you don't need an attendee ID. Captioning. Real-time captioning is being provided during this webinar. The captions can be found in the Media Viewer panel, which appears in the lower right corner of the webinar platform. If you want to make the Media Viewer panel larger, you can minimize other panels like the chat, Q&A, and our participants box. Submitting questions. For any Q&A that you have, please use the Q&A box to submit the questions that you have during the webinar, and we will direct the questions accordingly. If your question is not answered during the webinar or you are listening by phone and not logged in, you may email me, you may email info@ablenrc.org. If you have any technical assistance, you can use the chat box to send a message to the NDI admin, or you may email me, mredden, that's MREDDEN, @ndi-inc.org. Please note that this webinar is being recorded and the materials will be placed on the ABLEnational Resource Center website, along with all of our other ABLE webinars at www.ablenrc.org/webinars. And with that, I'll turn it back over to Miranda.
Thank you, Maggie. And again, we have our presenters. I'm Miranda Kennedy, and I'm the director of the ABLEnational Resource Center. I'm going to be facilitating today's presentation, and I'm so pleased to have with us our presenters. We have Marlene Uliski, who is retired from the Social Security Administration after a 35-plus year career. She was one of 56 work incentive coordinators from across the country who developed expertise in SSA employment support programs. After her retirement from SSA, she was certified as a community partner work incentives counselor through Virginia Commonwealth University and worked for the Florida Office of Vocational Rehabilitation as a consultant to establish the Partnership Plus program under the Ticket to Work legislation, and was later contracted by SSA to assist them with managing critical integrity workloads. She continues to work as a disability consultant for the state of Florida and for private individuals. At National Disability Institute, she is a manager on the training and technical assistance team and a disability benefits expert with the ABLENational Resource Center. Marlene's a graduate of Robert Morris University in her hometown of Pittsburgh, Pennsylvania. So I think we're in very good hands with our subject matter expert here today. And we're also being joined by Hector Ramirez, one of our 2019 ABLENational Resource Center ambassadors living in California, who is a CalAble account owner. Hector is a Latino Chiricahua Apache, two spirits on the board of directors for Disability Rights California and National Disability Rights Network. His ABLE funds are being saved to maintain a safety net while working to be self-sufficient. And we're going to be hearing from Hector at the end of our presentation today about the various strategies that we're reviewing and which of those strategies he's utilizing to fund his ABLE account. Hint, he's using a number of strategies, not just one. So after we hear from Hector, we're also going to be opening it up to hear from a few of our other ambassadors and advisors, and I know we've got at least two of those queued up, thank you for joining us, who are also ABLE account owners in order to hear about their strategies, because the strategies we're covering today present opportunities for ABLE account owners to make the most out of funding for your ABLE account. So let's go ahead and go to the next slide. So our agenda for today. The first thing we're going to be covering is ABLE basics, but it's going to be very quick. We've only got a couple of slides, and we're doing this just to make sure we're all on the same page. For those of you who know it, grab a very quick cup of coffee. But for those who don't have the background, we want to give you resources to find more about the ABLE basics. If this is your first presentation you're joining with us, we don't want to leave you behind, although today's topic is going to be a much deeper dive into very specifically strategies to fund an ABLE account. But if you want more broad information or more basic or beginner, we've got a couple of slides and resources to just direct you to where you need to go for that. And for everyone else who could probably give that presentation on this call, thanks for your patience as we're making sure we're keeping everyone on the same page and not losing anyone or leaving them behind. So after we cover that, we're going to be talking about identifying potential sources of savings, first-party contributions, third-party contributions, and the ins and outs of all of that, and funding strategies. Then we'll be getting to, as I mentioned before, our examples from our real-life ABLE account owners. We'll be sharing some other resources and updates on upcoming events that you'll want to join us on with the ABLENational Resource Center, and opening for questions if we have time as well. So with that, let's go to the next slide. And here I'm sharing with you the roadmap to ABLE. On the next slide, Maggie. There you go. So I'm sharing the roadmap to ABLE. This is a great resource for those of you, if this is perhaps your first introduction to ABLE, we're giving you this information on the roadmap. It is on our website, and you've got the links to access it here. But if you go on our website, you'll see the roadmap to enrollment, which will give you the 5 steps with 3 to 5 minute videos for each of those steps and directions around what is ABLE, who's eligible, how can funds be used, how do I manage my account, and finally, how do I enroll? That 5th step will help you get to enrollment of an ABLE account into an ABLE program. The next 5 steps are after you've become an ABLE account owner, how do you maximize that? And that's, of course, what we're talking about here today with those strategies to fund your ABLE account. But the steps in the roadmap to independence, once you're an ABLE account owner, are around setting your financial goals, building that circle of support, making smart financial decisions, monitoring your ABLE account, and finally celebrating your financial independence. And the links that we have here will take you to a fact sheet and a roadmap. This information is also available in Spanish. So with that, the next 2 slides really do just give us a quick overview of what is an ABLE account and why the need for ABLE accounts. So what is an ABLE account? ABLE accounts are Section 529A tax-free savings accounts that are owned by a person who has a qualifying disability with an age of onset before 26, where that person either receives supplemental security income and our Social Security disability insurance benefits, or if they do not receive SSI or SSDI benefits, if they have a disability certification from a licensed physician, an MD or DO, medical doctor or doctor of osteopathy, that indicates a qualifying physical, mental disability or blindness, which results in marked and severe functional limitations that have lasted or can be expected to last for at least 12 continuous months or results in death. The other piece to know is that some state-able programs have formed partnerships or alliances to improve access for eligible individuals to enroll and to lower program costs. There are also a number of individual state programs as well, but I'm mentioning this piece about the alliances and the partnerships because you can see different types of arrangements between states that are administering these programs, and you should be aware of that. In upcoming webinars, and I'm going to mention this at the end of today, we will be showcasing some of these partnerships and alliances as well as some of the individual state programs. Our next webinar in March is actually going to be highlighting the National ABLE Alliance, and the ins and outs of the work that they are doing, including details and information around the features and fees and investment options, things along those lines. So you'll want to tune into that. And here's as well a link to that you can use to compare the different state ABLE programs, another service of the ABLEnational Resource Center. So why the need for ABLE accounts? You all may be very familiar with this because you have a need for an ABLE account, but there are millions of individuals with disabilities and their families that depend on a variety of public benefits for income, for health care, for food and housing assistance. And with ABLE, for the very first time in public policy, it is recognized that there is an extra and significant cost to living with a disability. So this is where eligible individuals and their families can establish ABLE savings accounts that will largely not affect their eligibility for federally funded means-tested benefits. The funds in an ABLE account are meant to supplement, but not to supplant, not to take place of, benefits provided by private insurance, Medicaid, SSI, and the beneficiary's employment and other sources. So why save in an ABLE account? If we go to the next slide, there's a resource limit of $2,000 for most means-tested benefits. In an ABLE account, you can maintain eligibility for SSI, supplemental security income, Medicaid, and other public benefits, and your savings can grow. You can choose from multiple different investment options potentially. They can go from conservative to aggressive depending on your needs. And do tune in with us next month to learn more about as we start sharing this in some of our highlights from different partnerships around this. But really, there are ABLE account tax advantages as well. So the income in those accounts, while it's post-tax dollars that go into an ABLE account, they grow tax-free. The earnings grow tax-free. So you may qualify for tax credits for saving as well. There's some real benefits to this, and of course it can provide for a more secure financial future. And now, these you see in front of you are our 2019 ABLEnational Resource Center ambassadors, and they're all ABLE account owners. We've got parents, and we've got working age individuals as well. And they're very diverse, as are their savings goals. And you're going to be learning more about them through upcoming webinars, our newsletters, and highlights on them. But just to go through, our ABLE advisors, they're saving for a range of different things, from medical school, saving for communications devices, durable medical equipment, accessible vehicles, housing expenses, putting a down payment on a home, and also someone is putting down their goal is to purchase a house with a backyard for their dog. Additionally, saving for a toddler son's medical and education and future investment needs, as well as to have and maintain a safety net while working to be self-sufficient, to pay for an adult son's full share of in-kind support and maintenance expenses in order to maximize the monthly SSI payout, and also to save for retirement. So there's a really wide range of different goals that individuals are saving for. So I'm going to hand it over now to Marlene to share ways to identify potential sources of saving. So, Marlene? And you may be on mute.
Okay, thank you, Miranda. Can you hear me now?
I can hear you now, yes.
Okay, in this section we'll be talking about savings and savings goals and some strategies for contributions into your ABLE account. If you're listening right now and you're thinking, great, you know, it sounds really great, but it's really not a possibility for you, I encourage you just to listen in a little bit longer and to pick up some tips from us on how you can begin saving by making some small changes in your life or by taking some of the recommendations that we'll provide throughout the webinar, and also by reaching out to a circle of support. And we'll be talking about that a little later on what is a circle of support and how actually you can reach out to a circle of support. So identify your need for savings. So before we actually begin to talk about the potential sources of savings, we need to talk about identifying your need for savings. Like, why do we save? When we think about it, we save because we have a goal. And it could be a short-term goal or it may be a longer-term goal. A short-term goal is one which takes less than a year of savings, and it may be something like saving for perhaps simple dental work that may be not covered by your insurance or your Medicaid, or saving for an emergency. And I actually just this week experienced depleting my savings in my emergency account. I know how important it is because the other day I didn't have any hot water. And when I checked my water heater in the garage, I saw that it was leaking, and it was about 14 years old, and it was hissing a little bit. The pressure relief valve was making a weird noise, so you know the end of the story. I needed to replace it, but I did have money in my emergency savings for something like that. And that's always important to have. A longer-term goal would be something that takes a little longer to achieve, generally over a year. It could be something like saving to replace your vehicle, which may be in disrepair, or saving for extensive dental work, or perhaps saving for a home or for a vehicle. If you want to dig deeper and read about goals and goal setting, there's a whole lot of information on the ABLENational Resource Center website, or our parent company, the National Disability Institute. There's a whole lot of information there, so I encourage you to check it out. When you do visit the ABLENational Resource Center website, there is a great video on setting financial goals, and I encourage you to just take a look at that one. Now, when you are identifying your need to save, it's important to know the difference between a need and a want. And a quick way of thinking about it is a need may be something that's critical for your survival. It could be food, shelter, clothing, water, perhaps health care. And the want is something extra that you really don't need to survive, but you want it or desire it for other reasons. It could be something like designer clothing, or sometimes you'll hear someone talk about concierge medical services, or again, a second home or a second vehicle. Now, why am I telling you at the very beginning now that you need to know the difference between a need and a want? And it's because when you decide how much money you have available to save, you're going to be looking at your income, you're going to be looking at your expenses, and you actually need to distinguish between the two so you could be clear on whether something can be eliminated in order for you to save. So many people talk about wanting this or that, but they never actually try to make it happen, but you actually can make it happen. And in line with making things happen, when you're identifying your need for savings, it is always important to consider whether there are other public benefit programs that could cover your needs. Back in December, Attorney Jim Sheldon and I did a webinar on qualified disability expenses. And we talked about some of the expenses that could be covered by other public benefit programs. We talked about them just so that you would be aware of the programs that could fund the items or services so that you would not use the funds in your ABLE account and you can optimize your savings in ABLE. Some of those programs could include, as we said, in that webinar, vocational rehabilitation. It could be an American Job Center, an employment network under the Ticket to Work legislation. It could be Medicaid, Medicare, Medicaid waiver services, or perhaps your state assistive technology center. If you'd like to explore those, again, go to our website, and that webinar is archived, or go to our website, and Attorney Jim Sheldon has a case summary series, which is phenomenal. There's a whole lot of information packed into that resource. So now that you have considered other sources of funding, and perhaps if you did not find a source of funding for what you need to investigate the costs of the item or the service, develop a budget and a spending and a savings plan, and that will allow you to identify your monthly income, your benefits, maybe if you are employed, your employment earnings or other sources of income, and it will allow you to look at your total expenses for that month to see what's left for savings. Remember to keep in mind, though, needs versus wants when you look at your income and expenses, and know that your goals will change over time. Now, when you think about your goals in creating a savings plan, always remember that you are unique and one size may not fit all. In prior webinars, when we talked about qualified disability expenses, we also said that one size may not fit all, because a qualified disability expense for one person may not be a qualified disability expense for another person, because that expense for one person may be tied to a specific disability or specific need in their life. You want your ABLE account to supplement other tools you already have in place, and the tools could include things like a special needs trust or a disability annuity or other type of payments or savings or supports that you already have in place. And as we said, ABLE savings can supplement benefits provided through other programs. For example, if you're working with State VR and they helped you to find a job and they are providing you with limited job coaching, but you're not on a Medicaid waiver, you can use ABLE savings to fund additional job coaching sessions if needed over and above what VR may fund. Now, once you have established your budget and you know your income, you've defined your expenses, and you have your goals, it's a good time to begin saving in your ABLE account. We say some of the tips: save a little at a time, because every little bit counts. Be mindful of your spending habits and your needs versus your wants. Bargain with yourself. Perhaps if you meet a savings goal for several months in a row, you can reward yourself with something affordable that you really want, like a manicure or a dinner out or a movie or something that you really enjoy. Another tip is to hold on to unexpected windfalls. Save all or a part of that lottery winning if you're lucky enough to win. I am not. Hold on to unexpected gifts, or even save that back pay from the Social Security Administration. And if you are working, save through payroll deductions to your ABLE account. That's one of the easiest ways and the best ways to save, because it goes directly into your ABLE account before you miss it, or you can be tempted to spend it. So I think with that, Miranda, I'm going to turn it back to you to talk about identifying some potential sources of income for an ABLE account. So Miranda?
Great. Thank you so much, Marlene. And, you know, when you were just talking about that, you know, one of the features with ABLE is it's a great opportunity, whereas before, especially with folks who are on means-tested benefits, if you came into that windfall or settlement or back pay or whatever it might have been, what would you have to do with that, Marlene, back before ABLE?
Well, back before ABLE, you actually would have to spend it, because there was that $2,000 resource limit, and that resource limit is still in place if you wanted to place that into a regular savings account or checking account or not spend it. So you were very limited, but ABLE has really expanded savings opportunities.
Right, which is so great, because then you're not in that awful position of being like, I've got some money, this is a nest egg for a rainy day or when the water heater goes out, but oh no, I have to spend it right now. So this is an opportunity to not be in that type of position anymore, right, Marlene?
Yes, definitely.
All right. Thank you for the little sidebar on that. I thought that was an important point to make, and I'm sure it probably resonates with most of the folks who are listening in with us, I would think. Okay, so in terms of identifying potential sources of income for an ABLE account, it is so broad, and this is wonderful. Really, anyone can make a contribution into an ABLE account. And by anyone, we're also considering special needs trusts, estates, or others as part of anyone, as well as obviously the individual with a disability themselves being able to contribute to the account, their family members, their friends, their employer can contribute into an ABLE account as well. So really, it's very broad and open in that regard, and that's not the case with all accounts that can support people with disabilities. So there's a lot of flexibility there. The thing to keep in mind is that there is that total annual contribution limit, which may not exceed the federal gift tax contribution limit, and that's currently $15,000. So you can't put more than $15,000 into your account over the course of the year. If you put $15,000 in and you spend $5,000 of it, you can't put another $5,000 in, right, Marlene?
No, you can't.
All right, good things to keep in mind. That's a pretty frequent question we get asked. All right, so the other thing to keep in mind, and Marlene's going to cover this in more depth on a slide about 2 or 3 slides from now, that an employed individual with a disability can also contribute more above that $15,000 out of their own earnings, and that aligns with the federal poverty limit for a household of 1. So Marlene's going to cover that a little bit more in depth, but that also allows some more flexibility. This year it's $12,140 more could go into that ABLE account. And so those of our ABLE account owners who are saving for retirement or other things along those lines, that's a real opportunity to grow the amount in the ABLE account. Total lifetime contributions, they may not exceed the state limit for 529 college savings accounts, so it's going to be key to look into that piece as well so you know how high you can go. And really the goal here is to start saving now because we know savings grow exponentially, and especially if you're in those investment options, you want to start putting away, and you can now with ABLE. So with that, I think I'm going to go ahead and hand it over to Marlene to tell us about beneficiary contributions.
Okay, thanks, Miranda. And with everything you did cover, we will be going into most of those a little more in depth as the presentation unfolds. So you'll learn a little bit more. It's just not, the brief information that we're providing on the last slide. There will be more detail. So on this slide, it's discussing beneficiary contributions, and what we're talking about is obviously contributions by the ABLE account owner. Now, if you're not receiving a disability-based benefit from Social Security, you still can open and contribute an ABLE account into an ABLE account if you meet the requirements for opening the ABLE account, such as your disability began before the age of 26, you have a marked and severe impairment, and so on, as Miranda talked about earlier in the presentation. So if you're not on benefits, receiving benefits, whatever disposable income you have, feel free to deposit it into your ABLE account because it will continue to grow tax-free. Now, if you are receiving, however, a means-tested disability benefit from Social Security, and in this instance I'm talking about SSI or Supplemental Security Income Benefits, saving earnings or other income deposited into the ABLE account is still counted as income. Nothing has changed with how Social Security counts earned and unearned income. And I say it this way, and I want to emphasize it because this must be one of our top questions that comes into the ABLEnational Resource Center, because folks believe if they contribute earnings or other unearned income, like as shown on your screen, like alimony or child support payments or pensions and annuities or VA compensation and so on, it does not count. And that is untrue. It still counts. So nothing has changed. Finally, direct deposit cannot be used to avoid income counting rules. Some folks have actually written into the ABLEnational Resource Center and says, hey, if I have my employer directly deposit my earnings into my ABLE account, it won't count, right? And that is incorrect. Everything still counts the same. There is no change in the income counting rules the Social Security Administration has in place. So it's real important to familiarize yourself with those rules. At the end of the presentation, there is a resource for you to find a benefits counselor. If you are a working individual or you're thinking about working, there is a resource with a link so that you can find the free services to gain the information you need to make good choices in your life. Again, continuing on with beneficiary contributions, when the SSI program or SNAP, that's the food stamps program, or Medicaid, they look at savings you've accumulated in your ABLE account, and that's your savings plus the growth. They do not count the first $100,000. That means they disregard that whole lump sum, the whole $100,000. That's a huge step forward because, as Miranda was asking me about earlier, it's a step forward because before ABLE was enacted, there was that $2,000 resource limit or you could lose benefits. Right now, if that money is saved in an ABLE account, and that's a special type of account, a 529A account, it is disregarded up to that $100,000 level. Now, when that balance exceeds $100,000, either alone or in combination with other resources, the SSI payment is temporarily suspended, but Medicaid continues. So again, I'm saying the first $100,000 in ABLE is totally disregarded in counting resources, and there's no time limit to remain in this suspended status. So once you drop under again, Social Security could restart those payments. Now, the $100,000 level or the limit, it's not something that will occur anytime soon because the ABLE Act was just enacted in December of 2014, and no account given the $15,000 contribution limit every year, and it was a little bit lower than that the year before last. No account will be approaching that level just for a while. So if you're receiving means-tested benefits, it's just something that you need to know for the future. Now, if non-ABLE resources, if they alone are over the SSI resource limit, the special suspension does not apply. So what that's saying is that if you have over $2,000 in a non-ABLE account, say a savings account or a checking account or cash on hand, the special suspension status doesn't apply. So in the world of Social Security, what that means is if you remain in that status for 12 months in that suspended status, your SSI and your Medicaid would be terminated. Wouldn't be suspended, it would be terminated. So that's a little bit different. It's also important, I should have probably included it on this slide, that there is no resource limit if you receive SSDI, Social Security Disability Insurance Benefits, because it's an entitlement program. You can have up to your state 529 limit in your ABLE account. It won't affect the SSI or the SSDI payment. And those 529 limits range anywhere from about $100,000, I think that's in New York, to over $500,000. That's a big range there. Before we jump into the Able to Work Act, I wanted to take just a moment to talk about beneficiaries who actually work. And there's a lot of beneficiaries out there who receive SSDI benefits or SSI benefits, and they don't know that they actually can work and still receive their monthly payments or their Medicare or their Medicaid when they know the rules, and if that's their choice. And if their choice is they don't want to become self-sufficient, they want to supplement their benefits, they can do whatever is best for them. Social Security actually encourages work, and that's what I did in my past life before I retired from Social Security. I was a specialist in their employment support programs, like the Ticket to Work program. Folks can use, if they are choosing to work, they could use that program or other programs like the PASS, the Plan to Achieve Self-Support, to actually optimize their savings. Next month, on March 27th, I'm presenting on a WISE, a work incentive seminar for Maximus, who's the government contractor for the Ticket to Work program. And we will be talking about ABLE on that webinar, but the focus is actually the Ticket to Work program and savings. So if you want to listen in to that webinar, visit www.choosework.ssa.gov and register, and it's a free webinar. Now, the Able to Work Act, it is another piece. It provides another incentive for able beneficiaries who choose to work and who choose to save. This provision was actually passed as a part of the Tax Cuts and Jobs Act of 2017, and it allows certain able account holders to work and contribute to their able account above or beyond the $15,000 contribution limit. Now, when I say certain, what I mean is that a beneficiary is not eligible to make the additional contribution if they have or if their employer contributes into a workplace retirement plan on their behalf. And some of the examples are shown on your screen. It's like a 401A plan, a 403A or B plan, or 457B plan. Those are examples of them. Now, if the beneficiary is working and they don't have the employer-sponsored retirement plan like those shown on the prior slide, the ABLE account holder, owner can contribute money into the ABLE account from whichever is less. It can be their gross earnings for that taxable year, or in the 48 contiguous states, as Miranda said earlier, $12,140, or in Alaska and Hawaii, it's a little higher, as shown on your screen, $15,600 in Alaska, or $14,380 in Hawaii, and that's based upon the federal poverty level for a household of one in the 48 in the United States, for a household of one for the year prior to when the contribution was made. That's really a mouthful. Last year, we actually had an ABLE advisor who is an attorney. He does not have an employer-sponsored retirement plan. He is not receiving benefits from the Social Security Administration, and he does have a significant disability. And in his case, he was using his ABLE account much like a retirement account. And for him, it was a great decision because his contributions were growing tax-free. In his case, he has a goal, and he's working toward achieving that goal. It's always important to repeat that on the earlier slides, we said that if someone is receiving benefits, earnings from working, they're still kind of the same in terms of earned income or substantial gainful activity, and they're taken into consideration when determining eligibility for certain public benefits. And guidance from the U.S. Department of Treasury is expected. Now, that again is a lot of information packed into these couple of slides. So in essence, the Able to Work provision allows certain account owners to save up to $27,140 or even more if they work or if they live in Alaska or Hawaii. So that's an awful lot of savings. And again, it grows tax-free. So Miranda, I think I'm going to turn it back over to you to talk about account owner contributions, and take it away.
Great. Thank you, Marlene. Yeah, let's talk about identifying first-party contributions. And I don't mean to be a broken record here, but this first bullet point, you alluded to this before, Marlene. You absolutely can put earnings from work or self-employment income and bonuses into an ABLE account. But again, just to be very clear about that, ABLE is not an income shelter. It will impact your benefits in terms of your earnings and your substantial gainful activity level. Right, Marlene? That feels like an important point to even just reiterate here. So we've got this bullet point on this front slide, but keep that in mind, okay? So certainly for those folks who are not on means-tested benefits, that won't apply. That won't be a problem for folks who are using this account differently and can benefit from it and are not on means-tested benefits. You're not going to be worried about that. But for those of you who are, keep that in mind, be working with a benefits advisor, and you can certainly do that. You just have to be aware of the implications and the impact of that. So you can also, in terms of first-party contributions, put in Social Security or lump sum retroactive payments, your VA benefits, money from pensions or alimony. Again, those are things you need to be keeping in mind too and evaluating if they impact your benefits, but you can put those monies into your ABLE account. Disability insurance benefits, SSI benefits, income tax refunds can be put into this, including refunds due to tax credits. So those are some opportunities and places that you can pull from that are first-party contributions from the individual themselves who is the account owner. Is there anything else you'd add to that, Marlene, before you start talking about earned income tax credit, or that you think is important to reiterate?
I don't think so, but I think we will continue, and later on in the presentation, we'll talk a little bit more about other types of contributions, like a special needs trust contributing into an ABLE account, and we'll talk about others depositing money into an ABLE account, like third parties.
Yes, great. Thanks, Marlene. So I understand you're going to tell us about earned income tax credits now.
Yeah, now that it is tax time, I thought it was probably important to talk about the earned income tax credit because it is tax time, and we'll talk a little bit about another credit also in a future slide. But the earned income tax credit, it is a tax credit for low to moderate income workers, and the IRS website actually gives you the income limits if you're wanting to know what those are, and they vary according to your marital status and the number of children in your household. Now, to qualify for the earned income tax credit, you can be married or you can be single. If you do not have children, you must be between the ages of 25 and 64, or if you have children, between the ages of 18 and 64. If you have earnings from work and you file for and qualify for the earned income tax credit, you can receive this tax year in tax year 2018 up to $6,431. That's an awful lot of money that you could do something with, perhaps deposit some of that into your ABLE accounts for your financial future. The maximum tax credits for earned income tax credits for tax year 2016 and 2017 are also shown on your screen. If you qualify for the earned income tax credit and you do have at least one child, you may be able to claim other child-related tax credits. And because of the length of the webinar and the limited time we have, we won't go into those, but just know that those are available too. If you're interested in this tax credit, the IRS website contains an earned income tax credit assistant, and it helps you to determine your eligibility and actually to calculate the credit. So that's a good resource for you. On this slide, we're going to talk a little bit about savers credits. And since we are talking about tax credits, and I don't think there's a better time to talk about these savings, because not only is it the focus of the webinar, but I wanted to give a shout out this week also to America Saves, because it's America Saves Week. And it's a time it focuses on all of us increasing our savings rate. The FDIC, the Social Security Administration, thousands of banks and credit unions across the country joined the National Disability Institute in supporting the initiative. And again, you're encouraged to identify a savings goal and create your plan to achievement. So with that, the formal name for the Savers Credit is the Retirement Savings Contribution Credit. It is a tax credit as an incentive for low to moderate income taxpayers who make contributions into a retirement account. It will give the taxpayer a credit which can be deducted by taxes owed. The new law extends the credit to ABLE account owners who contribute to their own ABLE account, and they meet other criteria related to being eligible for the Savers Credit, as shown on your screen. Age 18 or older, not a full-time student, and not claimed as a dependent on another person's tax return. The adjusted gross income limit to qualify for the Savers Credit in tax year 2018 was $31,500 for a single filer and $63,000 for married couples filing jointly. This slide provides you with additional information on the Savers Credit, and because of time, I'm not going to go through all of these, but I encourage you to download our slides and read over these in your spare time. The webinar will be archived on our website along with these slides. So if you'd like to review that later, please feel free. We're going to talk about third-party contributions. We talked a lot about the ABLE account owner contributing, but we didn't talk about contributions made by others other than that account owner. It's important to understand that when someone is receiving a means-tested benefit, in general, when money is given to that individual, it's counted as income. So what's real important here when we talk about third-party contributions, it's the fact that these contributions do not count as income. It's important to remember, though, that the funds cannot belong to or be due to that beneficiary. Now, a third party is someone other than the ABLE account holder. When we talk about a third party, any person can contribute to an ABLE account, and under IRS policy, a special needs trust is defined as a person. Last month, we talked about that on a webinar we had on special needs trust, and I encourage you to listen in to that webinar. A transfer of funds from a trust to an ABLE is where the SSI recipient is a designated beneficiary, and the beneficiary does not legally own the trust, and the trust is not considered a resource to him or her, and the contribution is made by the trustee. In addition to a special needs trust being a person in the eyes of the IRS, that definition also includes a partnership, an association, an employer, and a corporation. So with that, I think, Miranda, I think I'm going to turn it back to you to discuss some of the other ways third parties can contribute or who are third parties.
Great. Thank you, Marlene. And we'll make quick work of this because we definitely want to get to hearing from Hector and our other advisors. But identifying contributions from third parties, as you mentioned, this is someone other than the individual ABLE account owner. So these can be contributions from family or friends, as we mentioned before, contributions from an employer. Also, the ABLE Financial Planning Act allows 529 rollovers from a family member's ABLE account or rollover from a college savings account into the ABLE account owner's ABLE account, the 529A account. And we have examples of that, and we certainly have had among our advisors and ambassadors individuals who've done that, and that can be an effective strategy too. So keep that in mind, that 529 rollover opportunity. I know some folks who are funding their ABLE account entirely from a 529 account that they had set up and established initially. There can also be, as Marlene mentioned, distributions from a special needs trust or pooled trust feeding into that ABLE account, a bequest from a will, keeping in mind those limits, because some of that, if you're getting a huge inheritance, you're going to want to also potentially have a special needs trust, or there might be another avenue for that as well. Also, the gift of independence, what that is it's a gift card, and we're going to share that resource and links to how you can get that gift card off of our website in denominations from $20 up to $200. You can have family or friends contribute using that gift of independence card. It'll go straight into your ABLE account, and other gifts from birthdays, holidays, or milestones, events. Can be put into that ABLE account as well, where in the past that had not been the case. So what are some other saving strategies? Let's go to the next slide, and then the one after that, the reaching out to a circle of support or others. So be sure to reach out to a circle of support or people who want to support you, or if it's your family member who has the ABLE account, your family member, in building that better financial future that's now finally possible and helping to meet those financial goals you've set. And those circles of support can be family, friends, a supports coordinator, clergy, an employer, or others. And those support coordinators, that's generally a service provided by a Medicaid waiver provider, or you can reach out to your protection and advocacy group in your state to get support around that if that's the support you need. If you don't have a circle of support and have a difficult time managing your money, despite efforts to track and regulate that spending, consider asking a family member, friend, or professional to help you with your finances and know when to get help. And as always, be cautious when sharing financial information with individuals you do not know well or those you've only known for a short period of time. So Marlene, can you tell us about simplifying contributions?
Okay, I jumped forward a little too quick. There are a number of strategies we recommend to simplify your contributions into your ABLE account. One of them is make systematic deposits into your ABLE account, perhaps when you receive your paycheck, or if you're not working, when you receive your disability payment on the 1st of the month or the 3rd of the month or a Wednesday. Organize your finances, pay your bills, your expenses, and include ABLE as one of those expenses, and so you don't miss it. You could do that by manually contributing into your ABLE account in the normal manner in which you make deposits, or one of the other methods may be using the automated methods to contribute. You could use electronic funds transfer. You could use payroll deductions that we talked about a little bit earlier. Or you can ask family or friends to make a contribution, a gift contribution to your account, either online or through the mail or through the newest way to contribute, and that's the gift of independence. Now, the gift of independence is a gift card. It allows family or friends or others to contribute, as Miranda said, $25 up to $200 to an ABLE account through the purchase of a gift card. You can access that at www.ablenrc.org/the gift of independence. Once you purchase that gift card, to redeem it, and it can only be redeemed for deposit into your ABLE account, you would visit www.giftofcollege.com. That website, even though it's named Gift of College, it redeems your gift card for deposit into your ABLE account. And it's really simple to do. I was looking at it again this morning when I purchased the gift card. You would click on the redeem button. You would register and create your profile, much like you would with other websites, and then enter the information to link the card to your ABLE account. That really is simple, and it's a nice way to gift someone or to remember someone on a special occasion. Some of the other things to consider, learn, and explore include these. Compare state ABLE programs along with the cost to find the program which best suits your needs so that you can enhance your savings opportunities while still meeting your goals. Just know that many of the state programs have different fees, maybe maintenance fees or monthly fees, or a fee for a paper statement versus electronic, and so on. Remember that your situation is unique. Your needs and your goals are unique. Talk to people you trust, ask questions, and ask for help when needed, and reach out to your circle of support. Learn about ABLE account rules for contributions and disbursements. There's an awful lot of information on our website under resources. Please feel free to explore that to learn more about ABLE. Also explore the free professional tax help available through VITA, PCA, or the AARP Tax Aid Locator tool. Instead of doing a tax return on your own where you may miss something, miss a tax credit, or miss the earned income tax credit, why not get free professional tax help? And finally, explore the National Disability Institute's Financial Education Toolkit. There's a lot of great information there on budgeting, establishing a spending diary, benefits counseling, or there's quick reference guides for financial education at our website, www.nationaldisabilityinstitute.org/downloads/. Now with that, Miranda, I am going to turn it back over to you to address or clarify some of the things that I covered and to talk to our ambassadors.
And I think we're going to go ahead and just let's check in with Hector. If we can unmute Hector's line, he's been listening, and he's one of our 2019 ABLE and NRC ambassadors, and he's using multiple of these strategies. Hector, can you share with everyone the strategies that you're using to put funds into your ABLE account?
Yes, good day, Miranda. Hi, everybody. I'm really excited to be able to join this group today to talk about different ways to fund ABLE accounts. I'm an ABLE ambassador this year, and one of the ways that I decided to help fund my ABLE account as an independent contractor, not only working and adding to it and through my SSI benefit, but also by reaching out to my circle of support, which in my case happens to be my large family and friends. My birthday's coming up, and I always get gift cards or little amounts of money, and I've never been able to kind of hold on to it. This year, I'm glad that I'm able to actually have another option, and so this year I'm actually going to be utilizing my Able Account program by asking my friends to contribute using the gift of independence, and either by getting me a gift card that they can sign up to, or by sending me one, and then I'm going to be adding them into my account. As Miranda mentioned earlier, my goal is to create a safety net so that in the case that there's any type of disruption to my benefits or to my health, I have a significant safety net that I can utilize. For me, it would be like between $2,000 and $2,000, so that I'm able to maintain working and I'm able to maintain my independence. I hear all these wonderful ideas that what people can do with their ABLE accounts, and eventually I want to be able to have a bigger goal. As a person with a disability, as we get older, our likelihood of being homeless grows every year. And hearing that people with disabilities can now save to be homeowners gives me hope. And hopefully I'll be able to have that be my goal later on. For me, for this year, actually, it's going to be using the gift of independence. And so I'm really, really excited to try it out.
Oh, we've lost Hector. Did you?
Oh, that's it. That's what I was going to say.
Oh, okay, great. Thank you so much, Hector. I thought you had gotten cut off. No, thank you so much for sharing the strategies that you're using. And happy birthday a little bit early. You've got the Ides of March coming up as your birthday. It's March 15th, everyone. So we know you're welcome. We won't sing you happy birthday right now. Okay. Thank you, Hector. And I know, do we want to just take a moment? I know we've also got Katie Oliver on. Katie, can you just share quickly what you're using, what you're doing to fund your ABLE account?
Sure. Hi, everybody. I echo a lot of what Hector said in terms of my strategies. I'm primarily funding my ABLE account through my own wages, which, as Marlene talked about, I still have to, report to Medicaid because I receive. I'm not on SSI, but I do. I am on the Medicaid buy-in program, so I still have to report those wages. But the ABLE account provides me a place to retain them long term and not just have to spend them just for the sake of getting rid of them to be under the resource limit. I'm primarily funding it myself, but I also have had some contributions from my husband as well as my parents. I have not had an opportunity to use the Gift of Independence gift cards yet because that program was just announced at the end of last year around Christmas time. I am really excited about it. I'm planning to see, I'm planning to see how it works out. I'm planning to use it in the next couple of months because I prefer to make my contributions in as much of a lump sum as I can due to resource limits, but I prefer to do it at the beginning of the year after I've done my taxes so that I know what my tax liability is, what my upcoming expenses are for that year, and then, deposit the excess into my ABLE account and still have it available for a lot of my, day-to-day living expenses as needed if unexpected things come up. So those are the two main strategies that I'm using.
Great. Thank you so much for sharing that, Katie. And we have one more of our ABLE NRC ambassadors this year on with us, Shane. And Shane, I know it's fairly straightforward what you're doing. You're not on means-tested benefits, but could you just share how you're funding your ABLE account?
Yeah, absolutely. So I am somebody who is working, who is also blind, so I qualify for ABLE accounts. And I'm just contributing directly, at the beginning of the year. I put a lump sum contribution in, and that's pretty much that. I will be using a combination of direct contributions and rollovers from a 529 account. Basically, what I do is contribute 12,000 into an ABLE account and 3,000 into a 529 because Minnesota allows a deduction for 529 accounts, but not ABLE accounts. And then, in the withdrawal phase of my ABLE account, I'm closer to retirement, I will roll those funds back into the ABLE account.
And that's because that's a benefit to you. And I think that's why it's important for everybody to examine your situation and even what's happening in your state around these kind of guidance and guidelines, because you can find opportunities like Shane did to maximize what you're going to be able to have in your ABLE account. And Shane, you don't have, you can't go with the able to work piece because you do have an employer-funded retirement account, right?
That's right. I mean, I could if I forewent, I guess, if that's a word, the 401k,
right.
But I don't want to do that.
You don't want to do that, no. And I know we have others who are self-employed or working for smaller organizations who don't have a 401k, and they're using that as well. So thank you to our 3 ABLE account owners who shared their strategies. We're right here at the top of the hour, but really quick, we just want to share the different resources. We're hoping you're downloading today's presentation and you're going to check out these resources that we've referenced. I think we've referenced all of these resources on the next couple of slides. The Resource Center itself, our case summary series that Marlene mentioned, how to make smart financial decisions, that building a circle of support strategies to do that, how you may find a certified benefits counselor or a certified community work incentives coordinator. That's an important link if you're looking into working and contributing to your ABLE account. Check that resource out. That how to purchase that gift of independence card or share the link with others in your circle of support to help them do so. That's the resource you've got right there. On the next slide, we've got IRS resources to learn about, in this lead up to tax time, free tax preparation services. You can visit or call the volunteer income tax assistance, VITA sites, or call them at 1-800-906-9887. You can go to myfreetaxes.com. And also there's the American Association of Retired Persons, ARP, tax aid site locator that you can reach at 1-888-227-7669. There's also information from the IRS around earned income tax credits, ABLE accounts, tax benefits for people with disabilities, tax reform allowing people with disabilities to put more money into ABLE accounts, and expanding the eligibility for the Savers Credit. These are all links to follow to learn more about that, as well as a publication with tax highlights for people with disabilities. But do please help spread the word to others and share information about ABLE accounts with your friends and family and community and groups, especially for those of you who are bought in and already experiencing the benefits. Talk about that with others who will trust you. We need to get the word out about this in order to keep growing this program, making sure it's very viable and sustainable long-term out there for ourselves and others as well who can have a more stable economic future as a result of this. And do stay up to date with information from our ABLEnational Resource Center and subscribe to our Achievable newsletter. And connect with us on social media, on Facebook and Twitter, and do continue to join us on future webinars. The next slide is the next webinar we're going to have, which is Wednesday, March 20th at 2 p.m. Eastern. And throughout 2019, we're going to be showcasing various ABLE programs. And in March, we're showcasing the National ABLE Alliance, a 16-state and D.C. consortium that offers high-quality, low-cost ABLE savings and investment program, which is available to eligible people nationwide. And we're going to be presenting on the structure and features of the Alliance, ABLE Alliance, and its member states, options and details of their investment portfolio and best practices, as well as testimony from account owners. And there's the registration link for that as well. And finally, if you have any questions, you can always email inquiries to info@ablenrc.org. You can call our call center at 202-683-7669. 6094 or visit our website at www.ablenrc.org. We look forward to hearing from you, and thank you so much, everyone, for joining us today on our webinar talking about strategies to fund ABLE accounts. Please take just a moment at the end to fill out the post-training survey and give us some feedback. Let us know your thoughts, and we will absolutely be taking a look at that, and we appreciate hearing from you. So have a great day, everyone. And that concludes our webinar.